What's up, guys? Just wanted to give a quick shout out to today's sponsor, Aptos. We'll hear more about how Bitcoin, DeFi, and Aptos is heating up later today. But for now, let's get into the episode. Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the company's funds or projects discussed.
Hey, what's up, everybody? Good morning. Welcome back to OX Research. Today, joined by my co-host Boccaccio, and we've also got Mark Arjun from the research team and frequent member of the Telegram chat, frequent podcast listener, and top holder of XPL, apparently, James Kristoff. How are we doing today, guys?
Wonderful. After the hyperliquid perps market was listed for XPL. It's great. A wonderful day.
Yeah, I'm doing well as well. I am also happy about the hyperliquid perps listing of XPL. Maybe not as happy as James is, but in my own way. I think partially because of XPL, partially because it shows that hyperliquid is continuing to list as quickly as they're able to, which makes me happy. Yeah, good day.
Yeah, I think I'm maybe as happy as the both of them, but indifferent about the hyperliquid listing.
Very good.
How big is that market, Bach? I actually didn't look at the.
When I checked, I checked like 45 minutes after. I'll check again now. I checked 45 minutes after they listed. It was 16 mil volume, 13 mil OI, which is not like anything to be like, wow, this is incredible. This is fantastic, but it is quite impressive, I would say, in the first 45 minutes. I will say I expect most of that to be early speculators, and then the next phase, I imagine it'll mostly be people hedging out their allocation. It's always like, I was talking to James about this because we both got into the deposit program, and I was thinking, like, can you hedge? Because, like, let's say I'm happy with the whatever it is at 5 bill, you can hedge it. It's just like you have such imperfect information compared to like, you don't really know when the token's gonna launch. I could just be eating funding forever. So it's kind of tough. So I don't know if a lot of people are going to be doing that and like shorting the perps to like hedge themselves or like take a price, but I don't know. Let's see.
We can. I want to talk about that more. I know James as well. I think there's a lot to talk about on like the stablecoin narrative in general, whether it's like stablecoin chains or just stablecoin fragmentation. There's a lot of, I think, talk on some of these things. Before we get into any of that, though, just a quick shout out for our sponsor today's stream is Aptos. Thank you to you guys, as well as DAS London is coming up. Blockworks Digital Asset Summit. It's coming up in London, October 13th through the 15th. Crypto's premier institutional event. Probably the premier Blockworks conference. You know, I said that about permissionless. I'm saying it about DAS now. I don't really care. I'll be a shill every single time. So if you guys want to come out, hear from leading global funds, financial institutions, DeFi protocols, etc., you can get £100 off your ticket at checkout using code 0x100. Not 0x10, 0x100. £100 off. You'll see Salve Boccaccio will be there.
Yeah.
And hopefully some actually Mark as well. Both of these guys will be there.
Confirmed
100%.
Mark will be traveling to London as EU, one of the few EU team members. We're going to be actually going.
I should be there too. I don't know if that will discourage or encourage people to go, though.
maybe wait till after that. I don't know. Ticket sale. No, maybe it's fine. Maybe people do want to go out and see James. But £100 off tickets, 0x100. Go check out the DAS London website. Get your tickets. We'll see you guys there. And then one last announcement on my end. Blockworks, we are hiring a research data analyst. So if you live in the data, the charts in SQL, you love making sense of on-chain data, diving in, building out dashboards, picking out insights, go ahead and check out the job listing and feel free to apply. We'd love to hear from you.
Very good. Yeah, doubling down on the data side. We need to hire more data analysts. So if you're a data analyst, if you have Dune experience and you're not an idiot, apply, and you might get a really good job out of it and be happy.
Yeah, if let's hedge that. If you're not an idiot, please apply.
Well, yeah, I mean, I don't want idiots applying for the job because then they're gonna be like, "Oh, we got this for Xerox research. He's an idiot." Can you imagine Westy getting upset at us? I couldn't deal with that.
He's probably going to AI filter all the candidates anyway. So,
yeah, true.
Did you have anything else, Bach? Okay, we can jump into it.
I'm gonna do the newsletter thing later.
Okay,
when we have more viewers.
That's fine. Bach is saving his big announcement for later on. All right, James, Mark. Then let's jump back into what we were talking about. I guess we can. Let's talk about Plasma maybe, and maybe in like the broader context of. I think there's a lot of stablecoin talk, some of it over the past few months, but even recently, like Wyoming announced creating their own stablecoin. There are a couple of like, crypto adjacent kind of companies that have announced like launching their own chains and then like, operating pieces of their business or like transacting on those chains using USDC or stablecoins to kind of like handle payment processing, like Stripe. Circle being another. I guess to the Plasma thesis, or even just like the stablecoin chain idea, or businesses transacting on chain via stablecoins. Like, I don't know, do we have like big ideas, big thoughts here? I feel like it goes. The two sides of this coin right now are like, this is just the hot narrative, so like jump in, and then the other side of that is maybe like, there's a real business case here to actually make use of this technology to, put out a better product for your customers. Curious where you guys maybe stand on that or what you think.
Yeah, I think it's probably like a little bit of both, right? Like, I won't pretend that like anything that I think here is like purely fundamentally driven. I think definitely like your high level comment about like stable coins being the narrative is something, but like I was super interested by the Stripe announcement. And then also yesterday, the day before, I don't remember, the Binance announcement for Plasma. I think like for any of these dedicated chains to really have a shot, they need to have that kind of like, wrench to wrap around their customers and force them to use something. So like if you're thinking of how monstrous of a business Stripe is and how they're integrated with basically every single electronic payment in the developed world, like that's so much more of a a toehold than whatever I think Circle is going to do. So I candidly don't know how Circle will compete on their chain for payments and that type of thing. When you just have Stripe that's already integrated and has already done all the work on the plumbing on the back end. Like building a blockchain for payments isn't difficult. It's the integrations with every single electronic merchant that's difficult.
Yeah, I agree. The Stripe one was interesting, especially as it was like its own L1, which kind of goes against this whole Ethereum is the home to stablecoins, and then these companies are going to make their L2s like Base and Robinhood on Ethereum. So it's kind of going against the grain in that sense. I mean, I still think it's good for crypto as a whole for these experimentations. And then I remember back in the day, Stripe was the most valuable company per line of code. And if they get this right, it's probably going to increase their TAM too. I mean, look at Tether. This is like maybe 10 years ago or something. I'm old. And this is like when they're still private. But then, I don't know, it kind of seems like with Converge, Athena's Converge, stablecoin chain, Plasma, this one, like it kind of feels like we're going into the blockchain, not crypto, private consortiums, blockchain, like route again. But this time it seems like it actually has some legs and backing and maybe a little bit more fundamentals. And like I'm not sure how I feel about that, but yeah.
Yeah, I completely agree with that. Both of you guys' takes. Danny, do you want to wait a bit? But we can speak on. Do you have a separate section for Plasma, or can I speak my mind freely?
We can talk about Plasma as well as part of this. Go ahead.
Just because James and Mark both mentioned Converge a bit. I think it's like the goal here is, I guess, like, I don't think you can really compete with Stripe very well. So each of them are going to have to build out their own niches. Like, I imagine Stripe will mostly be used for on the small business or business side in general. So like, I view Converge as mostly DeFi, just like expanding on the USDE product in general. Plasma is kind of the tough one over there. I imagine they're gonna mostly go for like emerging markets and payments in that side. Like I've historically been a Plasma bull, despite not having enough allocation to be bullish. But like that's the one side that I was a bit. I don't know. The Binance thing I think is good because Tron grew a lot because of the Binance integration. Like in emerging markets, people don't really use the wallets that we create. Like, when you see a wallet and like, oh, this is an account. No, nobody uses it. It's like centralized exchanges that they mainly use to pay each other and save US dollars. So I think that's like key. And I imagine they're going to do more of that type of integration to whatever like local exchanges there are in the countries that matter. So I can see them each carving out their own niche that I'm excited about. I don't have like a great take on the L1, L2 thing that Mark mentioned. I don't think it's bad for Ethereum that they're not building out an L2. It's not good, but like I think my base case is that these guys will all build out their own L1s, and if they build out an L2, I'm like, wow, that's great that they built out an L2. I imagine most of Ethereum's like whatever their like value proposition is always going to be what it's always historically been, which is that it doesn't stop. It's a bit slow, but it's like maximally decentralized, maximally trustless, and that's what it will be used for. I don't imagine it getting a lot of, which is not a bad thing to have. Like if you're the base chain to be trustless, maybe it's not great like REV wise, but just off of like provenance and you know what I mean? Like just off of that, it's good enough, I think. And then maybe it can get like a Bitcoin meme multiple, the way that Bitcoin's gotten a meme multiple from being the inflation hedge. Does that make sense? It sounds really stupid, but I think it makes
I think it does. I think like the other thing, the way I've been thinking about this is like, if you're Circle right now, you're clearly not necessarily in panic mode, but you're like, all right, my only business right now is clipping coupons on T-bills, and I need to expand, or else like this business isn't going to exist. Versus Stripe is coming at it from like the completely other direction. Like Stripe is not entering this business so they can clip a spread on T-bills. They're doing it for an actual like user demand, electronic payments perspectives, and obviously they're wildly cash flow generative. So like they're just coming at it from I'm not going to say desperation from Circle, but from like a position of need that they need to expand outside of their core business, versus Stripe already has a very established payments business, and now they're just kind of adding something into their toolkit. Like if I were obviously to put money on one to win, I definitely think it would be Stripe.
Yeah, I also don't see how you can keep like taking that 4% or whatever it's going to become if you're Circle. Like to me, I don't know though. Like I guess Apple offers the full T-bill yield, right? And they have a lot of users, but I mean, banks are still used clearly.
I mean,
So-
Sickle isn't even getting the full 4%.
Yeah,
They
exactly.
give-
They give
paying
half
most
of
of
it
it
to
away.
Coinbase.
Yeah. No, but you know what I mean? It's like
Yeah.
I imagine that gets compressed over time, and as like more
No, it's
competitive.
it's also not a long-term strategy, right? Like you as a company, you can't say like we're long-term dependent on short-term interest rates. Like that's not a serious strategy that you can have for long-term.
Yeah.
Yeah, and I think to your point as well, Bach, it's like, yeah, Apple or whoever else, like Robinhood and all of these like fintech, like neobanks, on like they're gonna offer you, a margin a few points like below what the rate is today, and basically give all of that to the customer. So yeah, I mean, from a competition perspective, they are already losing on that front if you're just someone who wants to hold, and earn yield on cash essentially.
Yeah.
It's just not competitive. So like they need to expand the product in other ways. I think the question that it opens up is like, if you look at like if Stripe does this, and if Robinhood is doing this, and XYZ other company is doing this, like I know, James, we were talking about this beforehand, but Austin Campbell did a recent interview with Laura Shin, was just talking about how there's almost like this race almost for like financially based companies to like roll out a product like this and basically like have it as an additional service offering for their customer bases. And you probably just see that like kind of go up the line of, you know, faster moving to slower moving companies. So obviously like the fintechs are jumping right on this, and it'll be longer for like your big, you know, institutionalized banks to offer maybe the exact same service. But it feels like eventually that's where it heads. And I don't know if you're Stripe, if you're Robinhood, it's kind of like, let's be fast and quick and like try to maybe onboard. Maybe we get a few more customers, or maybe we make our current customers a little more loyal to us in the meantime, and we don't risk losing them later when, you know, big bank JP Morgan offers the exact same service.
Yeah. I mean, if I was Circle, I would have, like, over the past 2 years, if your big bet is that stablecoins are only going to grow, you don't capture that whatever 3-4%. You allow users to get it on chain, and then you grow exponentially more, right? Because the ability to have like hold stable coins without taking on smart contract risk, and like growing it or like earning interest on it is, I imagine a lot of people would switch away from USDT to USDC just because like you can get 4% on it or whatever the Coinbase deal minus the Coinbase deal is. But instead they decided to fully capture it. Like, I don't know if that makes a lot of sense, like to be able to just give out instead of capturing it in the short term to grow. Any disagreements?
Oh, I think I agree generally. I think like one of the biggest things too is like, and maybe super crypto native people don't really want to hear this, but like I think the name of the game for Stripe and, you know, call it like Web2 companies is all about using stable coins, but completely abstracting away the fact that you're using a stable coin. So for your like small to medium sized business that's accepting electronic payments, like they don't really care that what they see on their screen is called a stable coin. They'll just notice the benefits on the back end, vis-a-vis like their transaction workflow, that it's working better with stablecoins. I don't think it needs to be like in their face that, hey, you're using USDC on XYZ chain. It's just the fact that like Stripe has abstracted away this stuff in the background of the plumbing and made like your forward-facing UX way better.
Yeah, I would completely agree with that. I might have a hot take on the Circle point though about like offering the yield now versus like keeping it, in that, like personally, I feel like it almost doesn't even matter to Circle in that respect, because they don't have a business model outside of that. So sure, they could give away some of that yield now, and maybe that makes people use USDC immediately to, you know, to earn the whatever percent on it. But like we're saying, regardless, they can't necessarily like do that forever. And if interest rates go down, or you know, your whole business model can't be based on short-term interest rates. So like at some point, like that just isn't enough anyway. So regardless, like they need to have a broader business offering no matter what. I feel like, to me, it's kind of like a moot point of whether they do or don't. I don't even think it fundamentally matters that much. More so, what else do they do with the business to grow it and build their customer base? If they're just going to sit around and like let Coinbase basically drag them around, then it feels like the story's kind of already written for them.
It's also kind of funny because Tether's, sorry, Mark, one thing. Like we say Tether's like the best business in crypto, and then USDC is just, and we're like Circle is not doing great, and it's the same business, right? Like that they run.
You actually you were queuing me up for my point there, because it's like, because Circle is using the yield to incentivize. They're just not giving it to us, the users. They're giving it to Circle. They're giving it, to Coinbase. They're giving it to Base. They're giving it to Binance, even according to their filings. So they're paying out this yield for distribution. It's just not us who can get it, and I'm sure they'd love to give it to us, but I think there's like securities laws blocking that.
Yeah, and I think the other reality there is that like the on-chain users, like, I mean, people with the risk to like be on-chain transacting, like, you know, they're hopping on Aave and Morpho and, you know, Camino and earning rates on lending on chain and earning higher than the risk-free rate, because, you know, they have greater risk tendencies. Now, maybe there is some like missed market share there of people who would otherwise have held it and been happy to like take the kind of the treasury yield trade basically, but it feels like at least the core like crypto audience member today that probably like isn't really that attractive because you can easily get that like basically anywhere, you know, any online bank, any fintech nowadays is offering that service. I will say I do think, to James' point, which I want to get back to, around like all these Web 2 and like finance companies, like the whole point here is just to be able to abstract it away, make it super simple for your customers. Like they shouldn't really have to care whether it's USDC, whether it's Tether, whether it's some other stablecoin that they've created. I think that's a good point. It opens up a question mark here with a bunch more like new stablecoin announcements. Before we get into that though, I do want to just real quickly do a shout out to, there it is. Sponsor for today's stream is Aptos. Thank you to Aptos. With Bitcoin DeFi heating up on Aptos, nearly 400 million in BTC assets are on chain. Aptos users can now earn yield on their Bitcoin via Echo aBTC and OKX xBTC without the typical bridge risks and high fees. Thanks again to Aptos for sponsoring today's stream. Jumping back into it though, James, to that point, I just want to say there's been a bunch of announcements here around new stablecoins. So I think I mentioned earlier, like Wyoming announced they were doing a stablecoin, the FRNT stablecoin. WorldFi has a stablecoin. MetaMask just announced a stablecoin. Like all of these teams, crypto related, non-crypto related, like, you know, states are announcing new stablecoins. And so it opens up this like question to that point around like, okay, are there just actually going to be, you know, there's going to be a stable coin for basically every single business that offers a product like this. And then they're just going to have some engine in the background, abstract it all away. And it'll just be like, you know, having a money market fund on Fidelity or something.
Yeah, I think this is like your infra versus app type argument, where infra in this case is just like the massive preponderance of all these random stupid stable coins. And what is probably actually going to accrue value is whoever creates the rails to actually buy and sell products like outside of crypto, outside of just trading. Like it's not going to be valuable to just supply your coin, because like obviously every stable coin is completely commoditized. It's whoever's going to be able to build the best rails in the back end to actually get like flow of that stable coin outside of just the crypto economy for trading, I think.
Can I ask a question about this? Why is Xerox Zucky in our Telegram chat asked this actually? So I'm stealing his question. Why the fuck would Walmart and like Wyoming, etc., launch a stablecoin? Like, what's the benefit? Like you said, there's like short-term interest rate. They can capture that. But apart from that, is there anything else?
I mean, they probably just have like dumb consultants inside of their like CFO organization that say like, hey, we should do a stablecoin because we should. I'm serious. Like, if you think of like what is Walmart very good at? They're very good at like supply chain management and
Selling
like
chicken.
running a really, really low margin business at like incredible scale and being incredibly efficient about that. Like, do I think Walmart knows anything about like electronic payments? No, like they don't. That's not their expertise. So yeah, I mean, Occam's razor would say like they're just jumping in to do it because they're doing it. That's kind of the
I don't know,
pessimistic answer.
like they weren't good at electronics. Amazon outcompeted them, and then now Walmart did up their e-commerce online, and then lets you pick up your groceries without even leaving your car when you drive into the car park. I mean, they're years behind Amazon, but they made it there eventually. And like to your point, James, that you said they're a very low margin business. And then when you're a very low margin business, and you know, maybe you have these specialized deals with Visa and MasterCard, instead of 3%, they take 2.52. And if you could reduce that even further by introducing your own stablecoin to BIPs, like you're adding a lot of free cash flow to the bottom line.
That's a good point.
Yeah, I think maybe to Mark's point, like there is, if you're Walmart in this scenario, like your customers who are, you know, product sellers, distributors, like buyers and sellers of goods, like, I mean, they're dependent on you. I think if anyone knows anything remotely about Walmart, like they kind of often get to set prices of products that get listed in the store because they have that brand power So to get listed there, like, and have a product being sold in Walmart is like a meaningful thing, right? Because they have thousands of stores. Like, you get a retail item out in front of millions of shoppers. That's meaningful. So I don't know if you're thinking with like a 30,000 foot view, and you think that like maybe some amount of commerce and like spending goes on to on-chain rails, and so having some means to do that via stablecoin platform, and then like if you're Walmart and you have all these basically like locked in customers, and you could force them to use your stablecoin rails and your stablecoin to like do some of their payments, and do some of those transactions, then I think I agree with Mark that like there's like a future case where like it could make sense where you save some bips, you save 1% on your settlement activity of business transactions with your customers by kind of putting them in that system versus having to use if it's Visa cards or other fulfillment methods.
No, I'm happy with them switching over to stablecoins, but isn't it much simpler for them to just use I don't know, Circle or like Tether or like any other chain like that instead of building out their own infrastructure? Oh, unironically, one project that is kind of relevant to this is M0. I don't know if you guys have looked into it. I find them quite interesting. So I think like I don't know if they have a token out yet. I think they have a governance token, but it's not like a speculation token. I think it's just like a governance, like actually just a governance token. But they allow anybody to launch stablecoins using their infrastructure, and the collateral on the back end is the same for everybody. So they use the exact same. So there's no like when you swap from USDC to USDT, you take like a kind of bit of slippage. With these, you technically shouldn't because the collateral is the same. I don't know how it's going to work if it's cross chain, etc. I don't think the Walmart guys care that much about that side, but it is quite interesting and probably something to look into. I should probably look into this.
I do think maybe just to lay it out, like the counter argument to not using Tether, using USDC is that they're taking the yield today. So like if you're Walmart, it's like, okay, if you
I
launch
guess
a stablecoin and have the collateral and have the customers, like you don't necessarily need Circle in that scenario. I don't know. I would assume if they were to do one, like it's probably still, it's like very early stages. Like there's nothing really happening here yet, but
I mean,
that
they'll
would be
do the math
thinking.
on they'll do the math on the back end, see if like, the yield versus like setting up your own infrastructure. I can't imagine it'll be cheaper to set up your own infrastructure to run it.
I don't think so either, but not because of the infrastructure. And I'm going to push back against myself and for 2 points. One is that the same Genius Act, the amount of regulations that you have to go through to issue a stablecoin, like the fintechs and banks already do most of it, and Paxos is already doing most of it. And so I think you have to get your entire business under much deeper regulation. And I don't think Walmart wants to do that necessarily. So that cost alone might not be worth it, especially if you're just trying to save on the transaction fees, then versus Visa, then you might as well use somebody else's stablecoin. And then secondly, to my point that Walmart is low efficiency business, they've tried to push the blockchain supply chain stuff years ago, and it to increase efficiency, and they tried to force it on their suppliers, and the suppliers didn't care, it didn't work out. So as powerful as Walmart is, they don't have like absolute power to push these things through. So those are some counterpoints to this bullish scenario.
No, that's good. I think I've only seen one example of those supply chain things working, and it's with fashion stuff. I don't know if you guys have seen. It's like a specific blockchain, and it like confirms that a product is what it says it is. But yeah, I get what you mean. The legal costs, infrastructure costs, I don't know. I'm sure they have, like James said before he left, they have some ex-McKinsey consultant figuring it out for them.
Yeah, I mean, the reality is it's a narrative, and they probably have a guy in a department somewhere who's going, wow, this is hot. And like, man, if we did look at the math, and if we saved 50 bips on all of our transaction volume, holy shit, that would be crazy. It's probably a combination of those things. And again, I do think it is one of those things where you could squint and be like, yeah, maybe that's a thing. But the reality is a big company like that isn't going to make a switch like that overnight. So if anything, if that ever does come to fruition, it's probably years out.
Sad James left because I wanted to ask him this. The real question comes after the follow-up. The first question is Stripe's L1 going to have a token? What do y'all think?
Probably not.
I don't think so.
I think
Because-
the whole thing is moving everything on chain, right? So I imagine they'll move they'll create some form of synthetic asset on chain, or probably they won't even have to. Like, you can just buy it on some form of a platform. Does that make sense? Why would they want second equity?
I don't see why they would have a token. Which is kind of like my point, because they don't need it for what they want to do, just the financial rails. So then, does any L1 stablecoin chain need a token?
Well, they can do dude. I honestly, like, token, no token, as long as I can get exposure to it, I don't really care. Like, if they had if they had a public equity, that's fine by me. I think if you are crypto native, you want to have a token. I think if you are non-crypto native but incorporating crypto rails, you probably shouldn't have a token. Like, that's how I would think about it. I think it's probably fine. But I get your point. You're trying to get me because I have plasma allocation. You're trying to ruin my thing.
No, I think we can recognize that, like, the market dynamic is still largely the same, where I mean, Stripe doesn't need to capitalize on launching a token to, like, capture this dual structure like market inefficiency opportunity. Like, they're a very valuable private company, and so I don't even know, like, launching a token today for them is probably doesn't even make sense from, like, the, I don't know, maybe brand risk side of things, I would say, since it's not really, like, positively accepted thing in the TradFi world today, is maybe what I would think. But yeah, I mean, I agree. If you're like a crypto native company, like, sure, we know about all these projects have, they probably have equity associated, but it's great when they launch the token, because the token is half the product. Speculating on it is what half of the people lined up on CT are here to do. So if you don't launch a token, then why, nobody's going to talk about you, unless you have a really great product. And oftentimes, there tends to be something of a correlation there of, like, if you have a great product, then the token can exist or not exist. It doesn't even matter as much anymore, because you have a great product anyway.
I've been thinking about that, and the issue is that in crypto, like, it's quite easy to get a bloated valuation. We know this. Like, whatever. Capital formation is very easy in crypto. We know this. But another issue is that if you do not know how to do crypto, you can also become undervalued. Like, I would say, like, Pump is kind of a good example of, like, Pump versus, I guess, Heaven's a much smaller asset, so it's, like, difficult to compare them. But, like, Pump should kind of probably be worth more. I know they have some metrics that are going down, but compared to some of the other products that we've sent to 15, 20 bill, whatever, it should kind of be worth more. But for some reason, they're not able to get that, like, they're not able to position themselves very well. So versus, like, Heaven, you saw, I mean, Peace is doing a fantastic, like, he's very clearly forming this narrative and positioning themselves very, very well. So I think, like, historically we say, like, crypto's great because you get bloated valuations, but you can also get that in TradFi. I mean, look at all these IPOs. So I don't know if crypto's the same as it was if you don't know how to play the game. I also imagine that TradFi is very difficult as well. So probably just
Yeah, I was going to agree. I mean, but I think it's kind of broadly the same game being played. Like, in TradFi, you see, startups and private codes, like, get to bloated valuations, but it's from riding the narratives, right? Like, you see, massive valuation bumps on, like, this, that, and the other AI startup, and maybe 99% of those will literally be dead next year. But it doesn't matter because that's what's hot right now. I mean, the same thing happens in crypto, but like to a smaller and finer degree, and like more like constantly is kind of what I guess I would say. Is there's like sort of always like a kind of new hot narrative every 3 months, and we can send L2s to a couple billion, and then we give up on that, and then we can send stablecoin chains to a couple billion, and then we give up on that, and then we can send the next thing. I mean, we did AI here as well. We did the AI agent coins, AI launch pads, like just the rotations and like the narrative switches are just faster here than in TradFi. But I think the same like broader game happens where you've got people with capital that they want to allocate, and they're ready to jump on the hot narrative.
Yeah. I mean, look at Palantir. I think TradFi is getting more and more like crypto, just because there's more retails entering the space, courtesy Robinhood, etc. And I'm going to stop there because you all know I'm a tokenator, and it's the last thing I'm going to say on this, right? So Stripe L1, no token, so then you don't need to incentivize anybody because it's just going to be Stripe running it. So it's just trust me, bro. And they need to have chargebacks and fraud detection and all of these things that you're not going to get easily in a traditional blockchain, because censorship resistance is most important, and you have to add those layers on after. And so then we have a private siloed blockchain database with no token. What is the point of it being an L1? What's the point of it being on a blockchain?
Can I make an argument here? I think most TradFi or like traditional businesses coming on chain are actually trying to do the same thing that a lot of people in crypto building, and it's just regulatory arbitrage. I think crypto is always going to be a little hands off, and probably Stripe will manage to get away with more leeway than it would have if it was building like a centralized database, like you said. Does that make sense? I think they're gonna get.
I have a thought here, and I'd love to drop a take. But Mark, I think the point is to quite literally position something in between the existing on-chain platforms and their current off-chain product. So if they need to have also their own like blockchain-oriented, call it a chain, call it a database. I mean, you can call it whatever you want. Like in reality, Base is just a server. Maybe in AWS, I don't know where they run it, but it's just a server that's running the freaking box for the sequencer. But in Stripe's case, it's going to be the same thing, right? It's just a computer that runs like this ledger. I have a feeling that the purpose is just to act as like the intermediary between those like two halves of things, and they already offer like some crypto payments and services. Like you can pay and transact via crypto. I think it has today like basically the same rates as like using card, as far as I'm aware. So I don't know if the point here is, you launch some chain that acts as like an intermediary ledger, and then it can accept like, bridge and transfer requests from other existing chains and like stablecoins that actually exist out on chain today, like on ETH or Sol or elsewhere, and act as like their, I mean, to your point, act as like their centralized ledger that they can true up, if customers are going to have a combination of, bank payments, card payments, crypto payments, maybe they can reconcile all that, and maybe it just makes sense to like call it a chain and format it in this way just because of the interaction with crypto. It's like my current view. I don't know if that's entirely correct. Would love to hear more explicitly, like from Stripe and others, what exactly or why or how the pieces and parts get put together here. But it seems to me that like you have to have some kind of interconnection piece to the on-chain component if you're offering like crypto services generally.
Yeah, the more siloed bases, the more TradFi integration stuff, it just seems like more reason for the Chainlink army to get a little bit more bullish. I'm just in. They have the ins.
One of our data guys just posted a thread on Chainlink. And it was only moderately bullish, so I imagine he's gonna get a lot of hate for it. But I mean, I guess like Link is kind of a clear one. Kind of sucks for like Mark, you mentioned Ethereum and how it's not being built on L2s, which sucks for Ethereum, I guess. But the counterpoint to that is like Cosmos, Avalanche, these guys position themselves exclusively for these L1s, right? Like they wanted to become the infrastructure partner for traditional institutions. I mean, I guess Cosmos less so. That to me always kind of felt like a Linux, not very commercially focused. No, but it's true. Like Avalanche, they have Evergreen, which was meant to be exactly what this is. I haven't seen anything about it, about like any Evergreen or like Avalanche L1 integrations from any of these traditional financial institutions. I'm sure there's some, and some people are going to get upset at me and be like, hey, man, we launched something like this 3 weeks ago. Are you stupid? And best of luck to them. But that's the like other side of the coin, right? It's Ethereum L2 is not getting used. Okay, that's fine, but Ethereum can still kind of pull it off. Versus like what is like Avalanche's game plan now? Like if you can't get anybody else, how are you gonna?
Carlos, thank you for joining. Bach, I was gonna ask to that point, like how is Avalanche so, I guess you could say, right about this thesis of like let's offer a service to have blockchains for all these companies, but also so wrong. Like it just didn't. It doesn't appear to be playing out, right? Like these stablecoin chains, like most of the announcements, like it's not really happening for them. And to something you've written previously, like I don't even know if it ever like maths out for them either.
No, they would always have to get the like Ethereum L2 thing, right? Like the L2s don't pay enough to Ethereum, but Ethereum can kind of just get away with it and say, look at all these L2s we have. They would have to do the same exact thing on the Avalanche side. I remember doing the math. It's like the revenue that they would make would be negligible off of each L1. I think they would have to have like a significant amount of L1s under them for them to be able to make a lot of revenue from it. And why they were right and why it didn't work out, I think it's probably a bit early to say it didn't work out. Like they could get free incredible deals next month. You never know. And I imagine like a lot of traditional businesses are quite slow moving, so it could just be like a 3-year thing as well. But yeah, they were right. I mean, they were wrong on the gaming bit so far, because I think they essentially position themselves as like, we're gonna do L1s. What needs L1s? Traditional businesses want control of over their stack. Makes sense. And gaming makes sense. Like both of these need like individual environments, not individual. You go like isolated environments to operate in, malleable isolated environments. Just hasn't worked out. I'm sure they will. It's not like a horrible story with Avalanche. I think they probably have a lot of money and they probably have enough pull to get a few deals going. I just wrote something on optimism. Well, I'm looking into writing something on optimism, and it's kind of like the same story where it's like you need to get L2s under you, because that's what the L2 that's what the L2 game plan shifted to, right? Like you're an L2, you want to build out your own stack and then get a bunch of like paying minions or like L2s and L3s under you. It's very competitive. The game plan was always like our tech is better, why don't you come? Our tech is better, why don't you come? It's not that. It's going to be a lot of like handshakes and giving money and giving incentives and being in the right rooms at the right time to actually make your product earn money and be relevant. Because there are, like off the top of my head, there's Ethereum, which can have its own L2s. There's Optimism, Arbitrum, ZK Sync, which can have its own L2s and L3s. Avalanche, obviously. Cosmos, obviously. Solana, you can have network extensions. I'm sure the other chains will also start making some form of bid. I think the only one that I haven't seen make a bid is Aptos, Sui, Hyperliquid, which are just bring everything on chain here. Working out for some of them, not working out for some of them. So we'll see. It's very competitive. It's more competitive than it's ever been, I think. And the margins are, I think, smaller now.
I kind of want to the Carlos, the network extensions on Solana. Like Is that their version of L2s?
Yeah, I mean, it's just like a different branding, but at the end of the day, I think it's just a marketing gimmick. I don't think it's any different like from a regular L2. But I do think the difference is like in the philosophy or like in the like goal. I think Solana has like a clear goal of like keeping the developers and the users on the L1 itself. And just like regarding the modular architecture, I think that's just a characteristic of it, not just for L2s, but for other sectors. Like if you look at modular money markets, for instance, like it's the same thing that Bach was mentioning, that it's not just about the tech anymore. That's the least important thing. Like it's more about BD and how to onboard like distribution partners. Like look at Morpho, for instance. Like Morpho has a very similar architecture to Euler or Camino or other like modular money markets, but like they were able to like partner with Coinbase for the CBTC deal, and that was huge for them.
Yeah, and that's probably looks like on their end as like giving up some revenue to the big bad wolf to get into the right rooms. But yeah, there's like two sides to that though. Like one is boots on the ground, negotiations, handshaking. The other one is like competing on the product level and not on the tech level. I'm gonna tie it into Hyperliquid, but this is how it's going to go. It's like we historically hear a lot about like you can put clobs on blobs and bullet and like asset, you want to be close to asset issuance with drift, but like realistically all that matters is you're a trading product, people want to trade on you. What do people want to trade? New markets. You list new markets as fast as possible. And I imagine, like, I still think Solana network extensions probably have a higher chance of doing well than other chains because there's a lot of interest in Solana, for example, like because it's at least relatively close. I don't know versus like L2. Like Arbitrum, I think probably does better than Optimism because Arbitrum as a chain is not completely irrelevant versus like OP mainnet has been kind of pushed to the back end for some time. So it's like that kind of stuff also matters. You want to be at least somewhat relevant while still working the
room. Yeah, I think a key difference here is just like Optimism, like they explicitly want to attract like new L2s or like new like chains built on top of them. Like Solana doesn't, I don't think the Solana Foundation really wants like more network extensions. They want like more people to build on the L1. Like I think that's like a key difference there.
Yeah, I'd like your take on this, Carlos, but because my read of network extensions popping up was more like a hedge from builders on Solana being worried that they wouldn't be able to execute improvements to the chain fast enough to be able to like basically service a product that they wanted to offer. But it feels like, Jito Bam and like, recent kind of like competition between like the Anza team and Fire Dancer team. Like it feels like we're seeing that, yeah, ideally the like core Solana people they wouldn't really want network extensions to succeed. They want to just ship a little faster and make them build it on the chain.
Yeah, I agree with that. I think like the recent network extensions like were a thing is just because there was a time where it was very hard, if not impossible, to build certain applications on Solana and have them succeed, such as on-chain order books or clubs. The reason for that was because like we talked about this before, but because market makers on Solana have like a structural disadvantage over takers. You have like network jitter and other things you need to deal with. And you can see that on like, for instance, if you look at the DEX landscape on Solana, like prop AMMs today, like have a higher market share than like in aggregate than traditional AMMs and order books like for the Sol USD pair or for stable and stable pairs. And that's just a byproduct of like the network, like microstructure on Solana. I think that as you mentioned, like as these improvements come in, like Jito's BAM, like Alpenglow, Fire Dancer, whatnot, like you could see more of these applications built on the L1 and have them like be competitive in terms of like performance and like structure to other chains.
One thing I want to add to that, and kind of related to the Avalanche thing, is Danny, part of the reason I think Avalanche was a little bit too early, and Optimism also, I think they were a bit too early, and like there's a light at the end of the tunnel. It's massive. It's like traditional businesses coming on chain. But if you lose relevancy before then, you're cooked, right? Like there's not, you don't have much pull. And with Solana, it's kind of the opposite. I think they want everything to come on one chain. Same with Hyperliquid, which is fair. But I think there is a limit to that. And I don't know if that's necessarily a bad thing. Like not everybody needs to have like you don't need to technically have businesses under you if your chain is still making money and growing. It's just like a different path. But I think network extensions are kind of a hedge on that, right? Like you can get the best of both worlds on Solana. You can launch an L2 or you can just come on the chain and build it. They're improving the chain as well. But yeah, hopefully that works out for them and they're not late. Which
I think that makes sense. Like kind of to your point, like what you said is that basically like for Solana and for people that want to come and build on Solana, there are profitable avenues to like build a meaningful business there today. And that's why there's a million of these prop AMMs now, because they see that like, oh, they can take some market share, capture some bips on the trading volume. And like, that's meaningful. Same with like, trading bots for meme coins. There's a bunch of money to be had there. But, if there's nobody, transacting on Avalanche's L1 or their 50 sovereign L1s, then it's like, there's not an incentive for like a new builder to go over there, but there's an incentive for Avalanche to try to sell that to a company to do their on-chain venture there.
Yeah.
But I just wanted to ask for Solana with these network extensions, right? Whatever, L2 semantics, right? A little bit of fragmentation there. These prop AMMs who are linking directly into aggregators like Jupiter, right? So you don't know what the code is. You can't build on top of it. No more DeFi Lego blocks. With Jito, bam, the application specific sequencing, like, that seems like it's really geared more towards perp, like perp dexes. It'll help them out more so than, like lending. And if each app has its own like sequencing, then again, composability becomes a little bit more difficult. And then all of the apps, most of the apps, I should say, especially the major ones in Solana, are competing on multiple fronts, like in different like DeFi suites, lending, trading, etc. So it just seems like there's such a focus on the apps and like such self-interest that Solana might risk running into just greater fragmentation in the L1 chain itself. And I don't know if anybody's talking about that as a risk, but it just seems like it continues to head there.
With just having too many apps on the chain?
Yeah, but then having not too many apps competing with each other on multiple fronts, the application-specific sequencing and prop AMMs making things less composable. It just seems like everybody's in their own silo, but on one chain.
Why would AMMs make things less composable, though?
Why would what? Sorry?
Why do you think prop AMMs are making things less composable?
Because how do you compose on it? Like they have to integrate with Jupiter directly, right? Like, can you, for instance, could you do like what Pump did and route to one of these prop AMMs without knowing what their code is, like you did with Radium?
I mean, you can like, but I don't understand how that like.
Isn't that the same thing?
Where's the composability though?
So can you? How do they make their deals with Jupiter? Like Jupiter normally just uses the aggregator. Don't they have to go?
They're closed source in the sense that you like there's a market maker like doing their thing, right? But they're open source in the sense like they're a DEX in the sense that you can look at their contracts and hit it directly. So like Jupiter can integrate with them, like Titan can integrate with them, Camino Swap can integrate with them. So you do have like that composability. You can route through them, but they don't quote everything, right? Like they quote only highly liquid pairs because they are actively market making that, and they need an oracle to update the price. So you wouldn't see like a prop AMM quoting like the newest meme coin, because it's not like, first, there's probably not an Oracle price feed for that, and second, like it's too risky for the market maker. So you only see them like quote things that are highly liquid, where they can like probably take advantage of the sex dex arbitrage and like really like make a lot of money like with market making it.
Yeah, just highlighting Carlos's point. Like you see that here with the Sol stablecoin volume, they've completely taken over the market share of this on Solana. And to your point, Mark, there are like 1 million of these now, right?
Yeah.
Like I remember we started tracking these a couple months ago, and it was like Obrick and SolFi and ZeroFi popped up, and now, I mean, there's there's GoonFi, there's Humidify, there's Tessera, there's a bunch of these that and more like keep popping up. Maybe just because they've all noticed like how attractive it is to just go out there and get into this game. But I would agree with Carlos on the pushback there. Like, I don't think it breaks anything in terms of composability. It's the same concept of, I mean, if you know the contract is out there, in the same way that like if you know an API endpoint is out there to hit, then you can hit it, and you can trade against it.
Okay, yeah, that's a fair point. But okay, so what about the application specific sequencing?
I think that's opt-in. I think that's a good point. I think that I don't think every application is going to use BAM for application-specific sequencing or custom ordering of transactions. Like, I don't think it makes a lot of sense for instance, for a money market to do it, or for Pump to do it. I don't know. Like, it makes more sense for specific like niche use cases, like Burbs. Like Drift is probably like a very good candidate and is using like exploring use cases with BAM. I know that Pith is also exploring use cases with BAM. I think what that will do, like, is take away some of the MEV that was previously flowing through Jito tips to Jito, and instead that will go to the application itself. So in a sense, like, Jito's kind of foregoing some incremental revenue. I don't know if that's kind of like your point there.
No, that makes a lot of sense. Thanks, Carlos.
Guys, I need to head, but before I head, I need to do a shill. Is that okay?
Speak freely.
So everybody knows that. Well, I wanted me on there. Well, never mind, we're good. Everybody knows that 0x Research has its own newsletter. And we are, historically, the newsletter has been written by the editorial side, who have done a fantastic job, but we wanted to make it a bit more analyst-y, I guess. So me, Mark, Danny, Carlos, Ryan, Luke, everybody from the Blockworks Research side, we are back to writing the 0x Research newsletter. So if you are a listener of Blockworks podcast, 0x Research, please check out the newsletter. We've been writing it. We've restarted writing it over the past week. We are going to make a more formal announcement going forward, but just wanted to bring it up. I know not a lot of our listeners and subscribers are subscribed to the newsletter as well. I think you might find it interesting. And we try to keep it as investment focused as possible and less slop, as opposed to the podcast, which is a lot more slop and less investment focused. Danny, is that okay? Do you have anything you want to say? Danny doesn't do the newsletter, actually.
Wow, that was crazy. Calling everything we do here slop.
Well,
No, that was great. I think check out the newsletter reboot. Exciting stuff in there. And then one more shout out as well that I will make for the show. Shout out again to our sponsor for today's stream, Aptos. With nearly 400 million in BTC assets on chain, supported by a secure, fast, and affordable MVM environment, Aptos has become the BTCFi growth chain. Aptos users can now earn yield on their Bitcoin via Echo's aBTC and OKX's xBTC without the typical bridge risks and high fees. With support from Echo, OKX, and Stacks' SBTC, Aptos is the place to go for best-in-class yield on Bitcoin. Appreciate the support, Aptos. And let's close it out here, guys. I guess shout out for Das London. Mark and Bach will be there for sure. So get your tickets if you want £100 off. That's 0x100.
That's $135. Just so
That's $135 USD. Amazing. Check out the newsletter, newly revamped. Hear from these guys writing. What is it? Tuesday through Thursdays, Bach? Tuesday
every
through Friday?
day, bro. We write it every single day.
Oh, it's every day again now. Okay,
Friday,
wonderful.
every day we write it. Every day we talk about our market thoughts, what we are looking at, what we're interested in. I posted the links in the comments on both YouTube and Twitter. If you are lazy, it is the last comment on both of those. So just click it, put in your email. I will pick 2 winners and give them $50. I don't know if I'm allowed to do that.
I don't think he's going to do that.
No, I will do it. If you subscribe today, I will just send me a wallet. I'll send you $50. If you're the winner, I'll do a roulette thing.
Did you see Jack tried to do that with his Prove airdrop?
Yeah, but Jack did it because of editorial integrity. I don't have editorial integrity. I want people to subscribe to the newsletter. It's my job. You have to subscribe.
Same thing though. He did it for sub growth. So
yeah,
same outcome. Did the ends justify the means? I don't know. Maybe let's just go around the room. Let's get some thoughts. Like the market yesterday was a pretty red day. Today, this morning was very positive. Like, I mean, everything is up. It seems like ton of volatility around like this Jackson Hole event. I don't know. I'm just curious. What do you guys have any strong thoughts here? Do we change theses? Like any coins, tokens they were super bullish on, like ETH and ETH DATs like had a big run and they've cooled off a little bit. Is it time for Sol DATs? Is it time for Pump to be back in the light after kind of waning for a bit? How are we feeling?
I have to go, so I'm going to give my opinion very, very quickly. I think I've been long the entire time, and I think we bottomed because I saw the most idiotic bear takes I've ever seen in my life, like just raw dog shit. So I'm long. That's it. I don't care about Jackson's Hole. I didn't check. Just generally excited about the markets. I mean, everything is looking good, you know? Who cares? Let's buy some coins. No, but more seriously though, I do think that sentiment has bottomed because I've been seeing a lot of really horrible takes about how the future of the world is horrible and that's our financial crime. They might be, but for the time being, I think things are good.
I mean, how can you top that? I think that's a good way to end.
Thank you, Bach. Carlos, Mark, any thoughts on the markets? Just long and strong. Excited for months to come.
Still holding long and strong. I think that story is not done. If you trace it back with Bitcoin, that's how much of a years ago, 5 years ago. It's not done. It's with 3% of the supply acquired in such a short amount of time, but we had these DATs haven't even started to deploy their liquidity on chain, restaking. They're not done raising money. They're not done with the money market offerings. There's going to be international pop-ups as well. Like I need to see an ETH all-time high before year end, before I start to say anything, before I start to say we're done.
Yeah, this is something I wrote for the newsletter, like Tuesday edition. But do you guys know how long it took Michael Saylor, like MicroStrategy, to acquire 1% of Bitcoin supply? It was like 3.6 years. And guess how long it took Tom Lee to acquire 1% of ETH supply?
Like a week.
Like 40 days.
Yeah.
It was like 40 days against 3.6 years.
But I guess
the pace of accumulation has just been insane.
To that point, though, is that not is that not indicative of like maybe it's like a bit overheated of a narrative? Like, sure, we could do more. We can do more on DATs.
Oh, no, I didn't mean this as a super bullish thing. I meant it's like it's definitely like quite heated, quite frothy.
Yeah, I think I do agree with you, Mark. Like, I don't think they're necessarily just done. I would say, I don't know that I'm like bullish on like Bitminer stock, for example. because we understand how the game works here. But I also would not be surprised to see, you know, hey, 5 more DATs next week, you know, big announcements of raises, you know, we're shoving more into the coins again. It just feels like that's where the market is at, especially if sentiment goes green again, which, you know, it looks like today things look very positive. So if that holds into next week and, you know, the following month, then we could see an extension of that. And I think the one topic that we've discussed is like if like Sol ETFs in larger format come online, and then we see maybe like a rerun of some fresh new Sol DATCos as well. Like that could be an interesting narrative, and maybe you get a stupid silly rally on Sol as well. Maybe you see it for a different asset. I don't know. We haven't really seen like XRP DATCos in size do anything crazy yet. Some of the other, like, it's another one of the really big crypto assets out there. BNB as well. Personally, I wouldn't be surprised to see it happen. I do feel like the data point that Carlos shared would not have me like necessarily so positive, with such a positive outlook, I guess. All right. No other thoughts. I think we head into the weekend pretty happy that all the charts and candles are green. Unless you're holding something really obscure and niche that got hit today. But as far as I'm looking across the board, things look quite nicely. So I think everyone can happily enjoy touching some grass, you know, have some drinks, have some food, whatever, go out, maybe get away from the screens this weekend after catching a nice day today. And we'll see you guys all next time.
Thank you, guys.
Thanks for coming on, guys.
Cheers.